Consumer prices retreated 0.2% in March as fuel costs fell, a sea change from the 0.7% rise in the consumer price index seen in February. Labor Department data did show a 0.1% rise in core CPI. Annualized consumer inflation was at 1.5% in March, down 0.5% in just a month. Year-over-year inflation hasn't been so mild since July, and that is reassuring news for the Federal Reserve.
After 6 straight months of advances, the Conference Board Index of Leading Indicators unexpectedly retreated about 0.1% for March. It had risen 0.5% across January and February. As far as anecdotal evidence of the economy's health, the latest Fed Beige Book noticed moderate expansion, adding that household spending grew modestly, even with the payroll taxes hike and higher gas prices.
The Commerce Department noted that housing starts reached a 1.04 million annual rate last month, a pace last seen in June 2008. While single-family projects dipped almost 5% in March, apartment starts jumped 31% to their highest level since January 2006.
Well, if you were following the stock markets last week, you had a bit of a wild ride. The SIBO VIX rose a little over 24% last week. The Dow down a little over 2% to 14,547. The NASDAQ down almost 3% to 3206. The S&P down a little more than 2% to 1555. They basically gave back the gains realized from April 8th through the 12th. The NYMEX crude lost a little over 3% last week to settle in Friday at $88 a barrel. COMEX gold fell another 7% last week to hit $13.96 an ounce at Friday's close.
Looking ahead to this week, Monday, today, the National Association of Realtors presents a new existing home sales report.
Tomorrow, the Census Bureau provides data on March new home sales, and the latest in FHFA housing index appears.
Wednesday, the Commerce Department reports on March durable goods orders.
And Thursday, the new weekly jobless claims figure will appear.
Then the Bureau of Economic Activity publishes its first estimate of first quarter GDP on Friday, which is also when the final April University of Michigan Consumer Sentiment Survey arrives. That's what we're looking at this week. My name is Eric Hagen.
I'm Greg Petrie.
We'll keep our finger on the pulse of the economy and report back to you next Monday.
So please feel free to subscribe. We'll talk with you then.